Hey, everybody. Y'all see me okay? What's going on? If somebody could type in the chat box if I'm working or not, that would be awesome. Hello. Yo. Does anybody see me or not? Hey, Paul, what's going on? How y'all doing? All right, cool. You know what it is with this app is there's always like a little bit of a delay. So I say something, and it takes a few seconds. It might be a tad slow. Cosmopolitan Hotel. The Cosmopolitan Hotel is a huge jip. So they'll charge you freaking $800 a day to stay here. And then what they'll do is they'll give you one crappy internet speed, and then they give you an upgrade option for $20 a day. But it doesn't actually speed up your internet. Go figure, right? So let's go into this. So I didn't trade much last week. I was in and out due to our trip to Las Vegas, but had a pretty cool time. You met so I had dinner at Tim Weinkraut's house yesterday with his family, which was pretty cool. And then we got some students running around over here. We got Winston over here lurking in the background, looking for some stocks, and the pretty fun stuff. So let's take a look and talk about the market a little bit. So I've been out of the loop, so just doing my homework. You notice a few things. Mary Beth, I believe she might come in if she wakes up or not, but flying from Las Vegas to Jackson takes like freaking 10 hours because you get so many damn stops. So to stay for the day and then leave in a few hours. So let's take a look at the market, and then we'll kind of dig into some of the other stuff that's going on. Hold on. All right, cool. You guys should see my screen now. All right, so the market itself had a really hot bounce the last last couple days. So let's dig into some of these indices. Bear with me, I'm without a mouse. All right, so after kind of double topping over here, we had this real big nasty washout. Now, we bottomed out on Thursday. Things got really nasty on Thursday, and then boom, we caught that super hot intraday reversal and have gone like just straight up. I mean, just a monster bounce on the S&P and some of the other indices. Now, the problem is, we're smack dab right back into a resistance zone, which, traditionally would tell us you know, the playbook says that's a bear flag. You know, when you break under these levels and you bounce right back into them, you know, it's a bear flag. But the last, you know, year or so, you know, every time we kind of have these really strong rips under the 200-day or the 50-day moving average, and you look like you're going to get a bear flag. And, you know, when you're really dropping, the market looks so nasty. So it's really easy to remember all the weakness. But, you know, anytime we've had these like kind of big rips under, they've actually been that's been the bounce spot. It's been the spot that flushes everybody out, and then the market goes back and kind of does what it's been doing, which is, you know, this monster, almost 2-year long uptrend. And you know, so this time, is it going to be different? You know, well, history tends to repeat itself, but you know, it's just that traditional playbook that we used to have. You know, when the market breaks under these levels and you got to be shorting the bounces, that hasn't been working. So since 2013, basically the biggest tenet of technical analysis hasn't been working. It's been flipped. You know, it's been the buying opportunity. So we'll have to see kind of how we act, you know, around this area. You know, do we refade back, or do we just rip right back into it and go to highs? As you can see, like, the strength of these bounces has been pretty spectacular. When we do bottom out like that, we get these like 1 month long bounces, which is just incredible. Let's take a look at the Russell. You know, the Russell 2000 is really the one that's been kind of always the weaker one. As you can see here, like this longer term support level on the Russell 2000, once again, was a bounce spot. You know, a lot of people think, you know, you come down to a level like this that, you know, the market breaks down. But anytime you're extended coming into a support level, that typically is, you know, higher probability of a bounce. Just like when we're trading stocks, you know, we'd like to see, like before a breakout or something like that, you know, we like to see that consolidation right in that coil right before, you know, it takes out high of day or takes out, you know, its breakout spot. Bounce plays are similar to that. That if you're going to break a level of support, you know, you typically will need some type of rest or a little bit of a coil before you flush. You know, if you're oversold or extended going into a support area, that gives you a higher probability of a bounce. You know, so that's just kind of one of the things always to keep a lookout at. So now how you got to play this thing and say, all right, well, you know, what have been the nature of the last bounces, but also, you know, where are next levels of resistance? And so, you know, we do have some upside here on the Russell 2000 before, you know, we'd get into more of a congestion zone. So just something to kind of keep an eye on. The NASDAQ, you know, similar look to the S&P. And you can see, even though the market didn't pull back that much, we did get really oversold. So one of the, you know, indicators that I just use is essentially a percentage of stocks above 40-day PMA. This is just a very common indicator by Warden. And typically, you know, when you get under 20, that tends to tell you that the market is super overstretched and due for a bounce. You know, because it's a breadth indicator telling you the percentage of stocks that are under its main moving averages. And so, you know, we got down to 13, which typically is a spot where you can get really stretched, and, you know, it tends to be the bounce zone. The same thing, you know, see, when you get above 80, that kind of tells you that the market is really overheated and needs to take a break, and everything is overbought. So let's take a look at, you know, our game plan, which will be, you know, one of them is recognizing where we are in the market in terms of resistance points and things of that nature. But also what we like to do is check the internal strength to see if we've got, a lot of moves. And so one of the things that, I always like to do is check out and see, like last week or on Friday, on Thursday, how many breakouts were there? How many breakouts were there versus breakdowns, and see if there was some underlying strength in the market. That can be an idea of what's going down in the internals. And then the other thing we'll do is, keep a watch list for both longs and shorts. I haven't done too much studying on going through a bunch of scans and stuff like that. But, the one thing we have been doing is just making, keeping watch lists on hand and making lists. And so, I've got a few names. And if you guys got anything, I'd gladly take a look. Obviously the big player, the big mover has been, TKMR. So, we're getting right back into a resistance point. So we're starting to see a little bit of a gap down on this name today. So this is an Ebola play. I guess maybe there might be Ebola or not. I'm not sure. I haven't been that hip with the news. We're starting to get, into a multi-day, run, and its previous high is about 32. So, it could be a potential fade spot, as that's going to be a major resistance level. You're already starting to gap down on this on an intraday basis, or on a pre-market basis. So one of the things that we'll have to do, is now that it's already down about $3 from its pre-market high, we've got to run a couple options. The first thing is, of course, everybody will want to short it because it's gapping down. But when a momentum stock gaps down, it can be a potential short because, usually a gap down is a sign of weakness. But one of the things that we have to watch is that opening dip, right at the open. Does it tick down and then that opening dip hold? And does it try to go red to green, or does it bounce and try to go red to green and fail? And if it does, then that becomes the short spot. And, you can really mitigate your risk with the stop right above, and then see if it kind of takes out down its opening range. And then, if that opening low does hold, and then you go red to green and so on and so forth, then, it's it could be off to the races again. Typically sometimes a little bit of a gap down just ends up being, it gets bought up right at the open. So you got to always kind of watch that opening tick and then see how the stock's acting before if it's gonna hold, or if you're gonna try to opening range break down this. Another stock that I noticed is getting some action. Winston had brought this up. We got DGLY popping pre-market. So obviously this is a stock that it ran to $35. It looks like they must have. Winston mentioned they got something. DGLY announced the receipt of initial purchase orders. So DGLY, is there be initial order under contract from his police, blah, blah, blah. Okay, so it's like some type of contract order. So, typically the news, I won't dig too much into it, but, what we'll be doing is watching, the price action on this. One of the things to understand is that, it's had a really low volume pullback, but it's given back about $20 on this thing. And, we're right back to some support levels. The stock's definitely oversold. So, it does have some potential upside. Last time it ran, It ran to a few days ago. It ran about $20. You've got, a $6 of potential upside. If it holds. Now, one of the things to always understand recently about DGLY is it has tried to pop a few times since that initial pullback started, and it has been they've been faded off. So they start off strong at the open, and then they kind of fade back. So there might be an opening play in this to the upside, as we do have some upside on it. Mostly because it's got pent up demand. It's been coiled up. But you got to recognize that it has been fading off a little bit. So after that initial opening push, we'll need to see potentially a strong type of intraday pattern that is going to give us the follow through. But then the main thing is start really checking in for the volume and stuff like that. If that opening move holds and we've got some really good volume coming in, it might keep going. So just a couple different ways to kind of play this thing. But remember, it does have the upside. How much downside are we typically getting around here? Sometimes these stocks, when they get this oversold, they just need some type of little catalyst to start going. I would not expect this thing to start running back to 35 or anything like that. When you get a move that's that extended, it takes a really, really long time to digest, and probably a whole series of other good news to keep it going. The other stock that we've been watching religiously for the last, so long is this Loco stock. And you can tell it's just been really kind of coiled up at this level. It's had a hard time getting over it the last so many days. But this is another stock, you had strong moves in MBLY and GoPro, and a lot of some of these other IPO stocks are kind of just hanging in there. You see it's been developing a really, really kind of tight range here. It seems to fade off into these zones. So this is a stock I'll be watching. It tends to move a little bit more herky-jerky of lately, mostly because that initial volume from its opening move when it was doing 20, 15 million shares a day has completely died off, and so the intraday moves are more choppy. So, but if you do see that opening push and it is followed by some volume and the volume expansions coming in, then that will give it a little bit more probability. But it's not that, it's not that high. It's not that far off from, it's not that far off from its highs. It looks like it's acting like crap because, well, when stocks are trendless for any period of time, all they do is they pop on strength and they fade off. That's what a range does. A range play, they pop and they fade, then they get to the bottom of the range and they fade, and then they pop and they fade, and they get to the bottom of the range and fade. So, when we see that range, if it breaks and holds and the volume's coming in, hey, come on in. What's going on? So we'll be watching this range to see if we get any action going. I'll make yourself at home. You may have to kind of move some things around, and I'm a complete mess in here. Sorry. Winston, this is Sandra. Hey. Yep, so on, and it's just going to tend to act like it's a little bit choppy. Twitter for a swing. Let me see. If you're going to add it for a swing, I would rather add it lower. The last thing you want to do is chase up a stock after it's made a $5 move. It's pretty strong, but you just that's not a good reward to risk ratio for you to chase a stock up after such a strong move. Easier to get easier to find something a little bit closer to the bottom, because Twitter is not a low float stock, so it doesn't tend to follow through in the same manner that some other stocks would. It's better to get a higher float stock low. SPLK is okay. It can typically go on some bigger moves than a stock like Twitter, but that 200-day moving average is going to be, it is going to be resistant. So you got to be a little bit tight with it. It's had an already pretty nice bounce. Ideally a day or two of digestion would help it build up some energy. Let's see what else we got over here. Yeah, the other two IPO stocks are, they are starting to coil up. It just happens to be that, we don't have much price action on them just yet. So you got to kind of look at more of like a 30-minute chart and see what's going down. So you can see, like with CYBR, we're just kind of hanging in this zone over here. So it looks like kind of 32 is the top of the range. And still pretty wide range, and 27.50 is the bottom of the range. So, right now it looks like it's, consolidating. And RWLK has had some more time to consolidate than CYBR. It's been sitting in a $5-6 range also. But you can tell here, you're starting to coil up. See, you're starting to coil up. You're starting to make some higher lows, and you're starting to develop this. So this could squeeze any day. The problem with this one is that, especially for a newer trader, it just trades. It has a huge spread, and then it trades like really, it trades really wild. It trades really wild. I've been in the stock a few times where, I was up $2-3 on it, and then I let a little bit ride, and then next thing you know, you're not looking, and it drops $4 on you, and you just piss away $1,000. Craig, now this stock is a little bit harder to get a read on. It looks to me like it's making a bottoming pattern here. You can tell the volume pattern has changed on it, and he's trying to pop and do like a 1, 2, 3 almost, but it's still like in this weird congestion zone where it's not going to have any rhyme or reason, till it kind of pops out of here. It might take a PR or something, or just a big day. But right now it's just see pop, fade, pop, fade, pop. Does it come back and fade and then go? But the overall volume pattern and structure has changed on the stock, so that's a good thing. It just needs to kind of get out of this. I've never really tried to day trade VDSS. I'm not sure how it moves. On a swing trade basis, if you had this bad boy, anywhere from AT to, anywhere in the zone, you would have had the money spot. On a day trade basis, I haven't actually tried to day trade this. It looks like, the big move was made on the opening gap, and now it's just kind of consolidating. But I'm not sure on this one. The chart looks strong. I just never tried to day trade this sucker. Usually if it's a stock that I'm not familiar with, I tend to watch it for a little bit of time to see how it moves, or like what it reacts to, what's the mojo on this stock. NETE or NE, I'm not familiar with this stock either. I mean, you've got this kind of nice move over your, 200-day moving average. Once again, this is probably not the best day trading stock per se, but it did have a nice move on Friday. I just haven't even used this one, but I do like the chart pattern. It's similar to SPLK. So, I'd probably keep this bad boy and watch and see how this thing goes. So ARDX, this play is probably a little bit too low volume for me to mess with. A couple 100,000 shares a day. You'd have to see it. That's not the type of play I usually play for kind of a red to green move. You could try it. It's just, it's not typically in my wheelhouse. AXDX, a stock like this is just too extended for me to be trying to buy this sucker. You're talking about a stock that's essentially just doubled. When I see something like that, I'm more leaning on the short side of this than trying to long it. That's a big move. You try long stocks that are up 5, 6, 7 days in a row. You're just asking to try to buy a dip and then get just nailed. Oh yeah, PBR is popping pre-market, isn't it? So this is like a big, big, thick stock. It does not trade well on an intraday basis. I've never seen it move well. It's probably better for swings and stuff like that. I mean, the chart itself is bunk, but charts off bottoms can go. If this ends up being its bottom on it, they can go, but it's a nasty looking chart. It's a big, thick, thick stock. My guess is this is a billion share float type of move. So then you got to ask yourself, does it have moves where it moves more than a couple bucks at a time? I'm not sure. We'd have to watch it. So with BABA, I'd like to see this thing consolidate more. We don't have a coil on this. And due to the big float on BABA, I think it typically needs more rest than a stock that's a little bit lower float. BABA's got to float more like Facebook. So it's going to trade like Facebook. It's going to trade real thick. So you got to make sure that there's really, really strong bases and stuff like that before you take a whack at it. You can't chase stocks like this. So you got to make sure you get a good entry. But, after this opening push, it's just kind of consolidating. It might take some more time. But I don't see anything necessarily that says, oh, my gosh, I got to have this. It's more of a neutral territory. BBRY. I mean, this stock's a turd. I mean, it just is. There's just no redeeming qualities about this company or this stock. You're just kind of in a lid right now. It looks like you're probably going from a range of 9 to 12. I would not be buying this one. I mean, it just doesn't have any history of really holding any moves. But you can play this range. You know, it looks like, you know, when it comes back down, it tends to pop to the top of this range. So, you know, you could have a range play with, you know, like a buy here and a stop here. You know, something along that end. And otherwise, really, till this range is broken, see how it just pops and fades, pops and fades. You got to play what's inside the range. Yeah, so QTWW, I haven't seen the PR on it yet. See if there's any action, but typically these small cap stocks see Lindy to build and operates first retail hydrogen fueling. So, you know, if they're involved in this, you know, PRs like that read well, and a stock like this tends to, when it moves, it really, really moves. So, you know, you could see it doesn't have any pre-market volume just yet, you know, so we'll have to watch it, but you can see there's a potential upside on this bad boy to make a move. Kihu. So Kihu is definitely probably one of those stocks. You know, we had it on our watch list for a big breakdown, and that breakdown did fall through. You can see here, tap, 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 tap. So you got this big rollover pattern. It did flush nicely, and now we're kind of in a little bit of a bounce zone. The breakdown spot was at around $68, or no, it's at $68 now. Breakdown spot was in its 70s. So, you know, you may see a little bit of a bounce towards 75, and then I would expect it to kind of continue back down. So you got a little bit of upside into it. And then, you know, obviously the stock is just, the overall chart pattern is too damaged to hold it for more than, you know, a handful of dollars. GPR is a good day trading vehicle right now. You know, its daily pattern doesn't have, its daily chart doesn't necessarily have a pattern on it, but it's been a good day trading vehicle. So, you know, you can play on a stock like this intraday setups. I just wouldn't be chasing it up too high unless you get a really, really good rock solid intraday setup. And it's too late to kind of swing trade it because you've already, you know, had a $10 bounce on it. But it's a good trading vehicle in general. You know, you can day trade this thing all day. And Farm, this is a stock I would not be playing. It just doesn't have, you know, it doesn't have the volume on it. It's not even a stock I'd be wanting to look at. Anybody else? Dun, 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 dun. All right, folks. Well, I'm going to let you guys go. I'm going to get ready to trade. I'll see everybody in the chat room. I got some students over and stuff like that, so I got to say hello. Hello. Cool. All right, folks. I will see you all in a little bit. I'll see you guys in the chat room later. Peace.